welcome everyone dialing into this morning's update. I'm pleased to have the opportunity to present to you again. This is the Audit Accounts Financial Reporting Standards Update element. My name is Neil Parsons. I'm MHA's lead in matters related to financial reporting, accounting, and those related company law matters. Today, I am privileged to be co-presenting with my colleague Bronwen. And so today I am privileged to be co-presenting with my colleague Bronwen, who I have had the pleasure with working with over the recent weeks and months, and I've learned so much from her in respect of technology, AI, data analytics, and everything in that space. And all of those things are fundamentally affecting our profession, the work we do, and how we approach our work on a daily basis. So please introduce yourself, Bronwen, to everyone before you allow me to dive into the detail.
Thanks, Neil, and what a fantastic introduction. So yes, I am the Audit Data Analytics Director at MHA. I've been in audits in various roles over the past 14 years, starting out as an auditor in financial services, moving into a technical role as an ACA tutor, where a lot of the audit data analytics software was coming through, and I had to train myself, and actually that's where the love of all of this tech came in bits. And now I lead data analytics campaigns and implement new technology into the firm. But Neil, what are we going to be talking about today? Okay,
so today is going to be a focus on two particular themes that should matter to finance directors. Firstly, I'm going to start with some updates regarding financial reporting and company law, the more traditional thing. But we're going to be looking in how AI is sort of shaping financial reporting work and the audit landscape, and I guess why, despite the advances in technology, the role of an expert advisor such as MHA remains fundamentally important. So I guess my involvement in this is like advocating the role of a human in the world of accounting.
Great. So shall we start with that technical update?
Yes, let's get the technical part over with first. And for those of you who join us regularly, and for those of you new to our updates, you'd be pleased to know that these sessions are recorded and may be accessed again in the future. And as this tech session has a technology focus, and as I am co-presenting with a real technology expert, I will try and break with traditions, so I will not be going through detailed accounting aspects with you, and I will try to keep things to a high level. A lot of what I will be covering was covered in much more detail in the previous session, so I really do encourage you to revisit that for further detail. But please, you can always reach out to me if you wish to discuss any detailed aspects of any of the developments that we are going to be talking about in the next few minutes. So let's start with listed companies and narrative reporting. And the big changes there at the moment are in relation to corporate governance. And the first thing I'll look at is the Quoted Companies Alliance Corporate Governance Code. So this is generally applied by AIM listed companies and smaller listed companies that are not required mandatorily to use the UK Corporate Governance Code. And there is a new version of this code described as the 2023 code, but we're 2 years on, but it's new. It's hot off the press. It's on the streets. It applies for periods on or after the 1st of April 2024. So a lot of AIM listed companies and smaller listeds will be looking at applying these requirements for the first time in their account period starting on or after the 1st of January 2025. And this is a high-level maintenance of the QCA Corporate Governance Code, which covers, some very key aspects out there in the business environment. For example, the role of stakeholders and investors, and particularly the role of those in respect of matters related to the environment and climate change. The importance of board succession and planning for the future. The viability of the company relies on a board and the future. So is the board ready to replace itself when need be? Are the plans in place for that? Also, fundamentally, taking into account the workforce, does the board consider matters in respect of the workforce? And generally, is the board effective, and how is board effectiveness measured? And not forgetting the one important thing, how is that board of directors remunerated? So next slide, please. Thank you. The UK Corporate Governance Code, and this would apply mandatorily to those companies that are classed now as commercial companies with equity shares listed on the regulated market, for example, the London Stock Exchange. They used to be called premium listed companies, but they're called something else now. And for periods on or after the 1st of January 2025, there's some high-level maintenance, which requires the code and corporate governance disclosures to focus also on the outcome of board decisions. It's great having the board procedures and policies in place, but what are the outcome of the decisions made? How are they impacting on the business and everywhere else with the stakeholders? And also for audit committees, alignment of the requirements for audit committees with other authoritative guidance that is in issue. Now, one big change, and this is for periods on after the 1st of January 2026, and this will be the requirement for a formal annual declaration by the board in the Statement of Corporate Governance regarding that they have considered and they believe that the material controls existing at the specific balance sheet date that the accounts relate to are considered effective. So that's an important change. That's a real focus on responsibilities. So next slide, please. In the world of IFRS, you'll be pleased to know that for periods on or after the 1st of January 2025, we've got a bit of a quiet one. There's only one mandatory amendment of significance, and that only applies to companies that deal with foreign currency transactions involving foreign currencies where there is a lack of exchangeability, and that amendment talks about the guidance and the judgments that may be needed in determining what actual rate of exchange to apply in those circumstances. The big changes going on in the future really are periods on or after the 1st of January 2027, where there'll be a new presentation standard, particularly affecting profit and loss information and how that's conveyed and how information is disaggregated, as well as requiring entities to disclose in their financial statements the use and definition and constitution of management performance measures that are often used in narrative and other reporting, bringing those things into the actual body of the financial statements and within the scope of an audit. So big changes in the future. FRS 102 within UK GAAP, the big changes are periods on or after the 1st of January 2026, where FRS 102 will align with a lot of the principles that exist in IFRS, in particular for revenue recognition and lease accounting from the perspective of the lessees. And these are pretty big fundamental changes and will require a lot of work by companies. Now, I went into quite a lot of detail on this last time, but also I am planning to do specific targeted seminars that are open for you to attend and listen to on this subject in much more detail in the very near future, before Christmas and after Christmas, and keep rolling out guidance in that particular area. But one thing also, for periods on or after the 1st of January 2025, is not to forget that where companies have got supplier finance arrangements in place that provide support and early payment facilities to their suppliers, additional disclosures will be required to support financial instruments disclosures, and also in respect of the cash flow statement as well. So do not forget those if you're affected. For completeness, I've included a couple of slides that deal with the transition requirements for periods on or after the 1st of January 2025 and periods on or after the 1st of January 2026. Again, I will not go into much detail. Please reach out to me if you need any help or you want to discuss any of those issues. I am more than happy to talk financial reporting with any of you. So yeah, and this is the important one here, periods on or after the 1st of January 2026, which sort of tells us that for leases, we do not restate comparatives. For revenue, we may restate comparatives. For uncertain tax treatments, and please speak to Chris Daines on that, because he is heavy expert on that. I'm just the disclosures person. That's retrospective unless it involves a lot of hindsight. For fair value and the changes to the definition of fair value to align with IFRS, that's prospectively, and then other amendments are retrospective. But don't forget, if you want to adopt all this stuff early, you cannot cherry pick. You need to adopt all of the changes at the same time. And finally, on the subject of company law, as I covered last time, for accounting periods on or after the 6th of April 2025, the size limits dictating the size of the company are effectively doubling in terms of turnover and total assets. There'll be lots more small companies, lots more medium companies, therefore less reporting burden, more companies getting audit exemptions, less companies being required to strategic report, and also accompanying that for the same period, simplifications to directors' report disclosures where the government had decided to sort of repeal various disclosures that I don't believe are useful or are already duplicates of other disclosure requirements. One big change that I have encountered, and this is as a result of the changes that the government are proposing in respect of the Economic and Corporate Crime Act. Now, this means that they intended for periods in the future, but actual specific accounting filings from the 1st of April 2027, that they will be requiring micro entities and small companies to file their profit and loss account information as well as the balance sheet. And that's a big change. But I understand that the government websites are announcing this change. I'm not aware of the legislation being put into force, but I am definitely aware that there are a lot of people in the background petitioning the government saying this isn't fair, this isn't reducing reporting burden, it's prejudicing small companies. And therefore, I am not certain whether those changes will ever actually come to fruition. So there you go. That is the traditional update, Bronwen. So
I mean, that's massively interesting, but we know I'm interested in technology. And for me, we're talking about how can technology assist us with all of these changes. So I do want to keep it more practical. And I think it would be really interesting for our audience to see that how could AI potentially help us with all of these changes and with all of these disclosures? And I think it would be good to see a real life example how these tools can be used. I do first want to ask the audience though, what currently are you using in terms of AI tools? So we should see a poll come up, and if you could kindly let us know what AI tools you are using. And you can tick all that apply. Quite a few of us are making use of free online tools. You can see that some people have paid subscriptions, enterprise level, and some in-house, very small in-house, but still quite a few or quite large proportion of people not using it. So So that's fantastic insight, and I think really today we want to see how we can start using it. So I challenged Neil to the use of AI and whether or not it would have been any use in disclosures. So let's look at one of those examples.
Okay. Super. I should take to part in a poll as well. So using AI in financial reporting, I will offer one olive branch to Bronwen, because she's like a real technological person, that she'll be pleased to know that the plan from the 1st of April 2027 is to abolish the paper filing of accounts. So there's one element of progress I can offer. So there you go. Now, the use of AI in financial reporting, from my personal perspective, I really do not use AI on a day-to-day basis. But when I'm operating my computer, I often find that AI might start creeping in. For example, I've got Copilot on my laptops, and it often does want to reach out and ask if it can help me draft an email or a Word document, and I kindly decline every time. Whether or not that's because I'm frightened of technology or I'm just still used to trying to do things myself. But what I did was actually I downloaded ChatGPT on my phone, the free version, which you can get from the App Store. I'm not advertising it out there. I'm not endorsing that product in any way. But I've got a new friend now, so I can ask it financial reporting questions. And what I did was actually ask ChatGPT the open question. My company reports under FRS 102 and sells goods. What accounting policy should it disclose in its accounts? And within a few seconds, and these are some of the screen prints from my phone, I was greeted with quite a lot of information that I was personally familiar with. For example, ChatGPT told me that for FRS 102, section 23 of FRS 102, that is requirement. I don't memorise the actual sections of the standards, so that was good. So it's better than me in that respect. And it also gave me a great overview of the criteria for recognising revenue in the first instance, those 4 or 5 specific things that need to be met before you actually recognise revenue under FRS 2. And then it sort of gave me some additional notes and pointers saying, if your company offers returns, volumes, discounts, etc., extended payment term, your policy should think about all of that as well. So, and if delivery terms are important, well, they are important because they're highly fundamental to when revenue is recognised in the first instance. So, and also goods and services. And they asked me very kindly, could it help me in drafting a tailored version of the accounting policies? And what type of company was it? Was it a retail, a manufacturing, or a wholesale company? And so I told ChatGPT that I was a manufacturing company. I was recognising goods when shipped, and I offered returns but no rebates, and there were warranties. So again, perfect. The disclosures went ahead, and I was given what looks like, to the layman, a really good set of paragraphs that could be inserted into a set of financial statements that cover risks and rewards of ownership, how revenue is measured, when is revenue recognised, provisions for warranties and things like that, whether warranties are offered as a separate service. So there's some very good things there. But then it sort of slightly started to get carried away and started asking me some other questions. For example, do I need to think about installation services and customer specific customizations? And further things that I didn't cover were that it actually sort of asked me if it wanted me to disclose, to draft loads of other accounting policies on different things, and also have it all in a beautiful Word document. So
I mean, that looks rather impressive, Neil. So do you think, this did the work for you?
Being the sub-technical person that I am, I was there to challenge it really. I wasn't there as the general preparer of the financial statements, looking for help and a bit of a shortcut or a bit of a leg up in terms of getting work done. So whilst the output I thought was great as a starting point, some of the things that I did note that ChatGPT did not ask me what the accounting period was that I was dealing with, because I've already said revenue recognition rules change for accounting periods on or after the 1st of January 2026, which would fundamentally affect the wording and the construction of the accounting policy offered. As I said, the format offered of the information was great, well written, and it could be considered coming from a human being. And whilst ChatGPT did ask more detailed questions on the type of entity, I didn't feel as though they played much of an important factor into the specific nature of the wording, because sometimes I felt like the wording might still feel a bit retail orientated rather than manufacturing orientated. And in terms of returns, it actually used terminology talking about probable that there won't be a reversal. Now, I'm sad enough to know that that type of wording appears in IFRS and UK and US GAAP and will appear in UK GAAP for periods on or after the 1st of January 2026. But, my current mind with the current rules does not think about current things about reversal. And then towards the end, I think ChatGPT was slightly getting carried away. I told them that it was a manufacturing company, but why was it asking me questions about installation and customer-specific customizations that possibly did not really have the feeling of just a general manufacturing company that sold goods? And I felt it was sort of erring towards either like some sort of software company or some manufacturer of real bespoke assets where maybe long-term contracting is applicable rather than the delivery of goods.
I mean, that's certainly interesting and impressive that you could identify those, but you only gave it one chance. Surely asking it a different question might elicit a different and better response.
Yeah, I'm not being unfair. I mean, the response is only as good as the question that I asked, and I asked a very high level question, and I'm sure that if I'd have offered much more information, it may have had much more to feed from. But I guess from my perspective, I was testing the water and seeing what it would come up with. And with my skeptical hat on and my knowledge of reporting, I knew the additional things to ask and the additional considerations that might be necessary in order to complete the task at hand. So I did approach with caution and skepticism, and I wasn't trying to trap it or lead it in any way.
Do you have another example to talk us through?
Well, the problem is that once you start with these things, you sort of carry on. But I after the second one, I put the software down. So following on, I asked ChatGPT, okay, our company reports under FRS 102, what revenue disclosure information should be included in the accounts? Now, it was quite clear in that response, and it was a very, very high level question. So am I surprised with the response that I got? In these circumstances, ChatGPT didn't seem that inquisitive. For example, it offered two solutions based on whether I was a small company using Section 1A of FRS 102 or whether I was a non-small company. So it gave the full requirements of FRS 102 as well. But also it gave me disclosure requirements that exist in the Companies Act 2006. So it sort of gave me like a palette to deal with. Now, again, my reservations were ChatGPT didn't ask what the accounting period was. There are going to be major changes to revenue disclosures, and those are applicable for periods on or after the 1st of January 2026. The disclosures are much more comprehensive and different. the full version of FRS 102, section 1A of FRS 102, are really philosophically different. One's full disclosure, and the other one is just simple disclosure based on simple small company law, with the proviso that directors should need to disclose more information if it's required to show a true and fair view. So ChatGPT seems to not understand any specific judgments that may be necessary. It didn't actually ask me what type of company I was dealing with, and it also automatically assumed that I was a UK company. I could have been in the Isle of Man, I could have been sunning myself in Jersey or Guernsey, you know, but it offered me the Companies Act 2006 by default. Again, that could be my fault because I didn't give enough information. But I as a layman and a new user to financial reporting and a new preparer, I may have been confused by being given the small company requirements and the medium and large requirements at the same time. And also for company law, for larger companies, medium and large companies, for analysis of turnover, there do exist still some seriously prejudicial exemptions where, in the opinion of the directors, giving too much information is seriously prejudicial to the interests of the company. And it is an older concept, but it still sort of exists in law. So in that respect, I blame myself for the output or and not trying hard enough to really do it, but it did prove what you can actually get back and whether the information that you do get back is useful.
That's very insightful and very illuminating into how far we can go. So from my perspective, then, it looks like it gives you a good starting point. And also a little bit of the scary part is it looks like a very plausible answer. And I think a lot of, well, I'm talking for myself, but I think a lot of our audience members aren't as technically savvy as you. And as you say, sad, I think it's interesting. But we might not be able to interrogate the response or the output that you have done. And it does look very professional and sleek that I might be inclined to use that as my output. And thinking with my auditor hat on, we of course need to maintain that professional judgment and skepticism and still verify the accuracy of our outputs. So certainly then, and again, thinking from that audit perspective and preparing for your audit, we might now be asking you, have you used AI? How have you checked that? What controls did you have in place to review outputs? And I think certainly, I think I saw in one of the comments, and I think you mentioned you just used ChatGPT on your phone.
Yeah.
Your questions were quite general,
yes,
and it didn't give any client-specific information. But of course, if you're putting sensitive data there, that might be a concern as well. So actually, by using this, and I can see why people be scary, this looks like it might produce or highlight additional risks for people. Would you agree with that? Yeah.
Totally. I mean, I approached this as a very risk-averse person, so I was very careful with the information that I supplied. You know, I don't have entire trust in the technology. That's going to take quite a lot of time to develop. I don't know how that information is used in the background and where it may or may not end up. So I was very careful not to put anything that could breach confidentiality, somebody else's information and agreement. How do I know that if I put another client's policies and procedures in there that ChatGPT doesn't one day regurgitate them and give them to somebody else? You know, I do not want to be part of the loop of amplifying things. But what I did find, and I think it was a good thing, for me personally, in the role that I do, and we all have different roles within business, is that it amplified my behaviour to be inquisitive, to be skeptical, to be mindful of the output and not necessarily assume that it's going to be correct. So it does amplify behaviour, and whether that is a good thing or a bad thing, I imagine there's positives and negatives there. So care is needed.
Exactly. Important care is needed. And seeing from our earlier poll, a large proportion of us are using AI. Only a small proportion has said they're not using it. So, of course, when there's risk involved, do we have a policy to address that? So I do want to find out from our audience, do we have an AI policy in place? That's quite illuminating. And I think if you're already looking at those responses, something for our audience members to already start considering. So we've got 30% saying, yes, they have one in place, but staggering amount of people saying no, and quite a large proportion saying that they don't know. And again, from preparing from an audit perspective, that is something now that we're going to ask. Do you have an AI policy in place? Are you implementing AI tools? So if we think about this in comparison and contrast to our earlier question of, are you using AI? This doesn't quite match up. So something to think about and to start considering, given the facts and the risks that we have just highlighted there. So in terms of implementing AI in financial reporting, I think it's quite important and to see that we should start embracing technology. We see that people are already using it just from yourselves as audience members. If you're not using it, your competitors using it, and your employees and your staff are using it. And what's really important is to empower them and to bring them out of the shadows and recognize where the technology can actually have an impact on your business and where it could be helpful.
Yeah, and certainly, I mean, I'm not sort of saying don't use AI and things like that. We've got to embrace technology because technology is the future and there's no way of avoiding it, but it's how we embrace this technology. You know, all the great scientists of the past, I've got a scientific background, did the brilliant experiments that came with it, the discoveries. They did all of those things under laboratory conditions. They did not want adverse consequences of the impact, albeit, you know, so for example, the Manhattan Project, somebody thought that the sky might set on fire completely, but they were prepared to take that risk, which is quite frightening. That these things should be done under safe laboratory conditions, and it's so fundamental to understand who within your business is using AI and where it's being used, how it's being used. The information that might be presented to you as finance directors may have been prepared using AI techniques as shortcuts. How do we know that that information is being challenged up front by the preparer of that information? Is it the case of button pressed, oh, here's my short presentation, or here's my short summary of something? Is it all corroborated? And I think this is the mind change, it's the focus. I don't necessarily want to change us into being doers and acceptors of everything. You know, the world is very complex, but as I said, I'm trying to advocate for humans in the accountancy profession here. So it really is time for us to shift our focus from being a doer to, in this environment, actually being open to challenging, confirming and documenting. If things are more efficient and things are done quicker, that should give us time to like challenge what we have, confirm, document, communicate with others, looking for improvements. You know, if I was a finance director and I quickly drafted that accounting policy and it gave me the rest of the afternoon, I could have gone down to the warehouse in my manufacturing company, spoke to the people on the ground, actually found out certain, you know, when are we recognising revenue? How do we do? How have we changed any of our delivery terms? What are customers doing? Are they coming to collect? Are we sending it out? What dispatch methods are we using? You know, theoretically, it should give us more time to focus on improving, and that's where the benefits will be. But using it in an incorrect and uncontrolled manner is going to have detrimental impacts on our business.
Absolutely. And I mean, just from seeing what we've highlighted in your example there, is it gives you a first run, and we're shifting then that perspective of challenging, confirming, and documenting, and of course, like I mentioned, having that AI policy in place. So thinking about then how we could prepare best for when the auditors come in, and actually just in managing those risks in your company. Neil spoke about how then we can shift roles and focus our attention in other areas, and that's absolutely what we're doing here at MHA. We of course use quite a wide-ranging platform of technologies to assist in the way that we perform our audit. And we then, of course, expect our clients to be implementing technology in a similar manner. And so, of course, we'll want to know what digital tools you're using and how you control them. And of course, remember that our AI policy isn't just a governance document. It will also set the expectations of those acceptable tools, the record keeping, and the restrictions. So that's something to keep in mind. And so thinking about, well, there are free online tools and the security about that, of course creates audit risk for us as well, that we will want to address and will be asking you when we come in to do your audit. So certainly things to consider then and prepare for your audit in this digital era is to update that risk register, include AI as part of that, strengthen your review controls, think about how you would challenge that, whether that's including an expert, which we'll talk about shortly, especially around AI assisted work, and that you know in your business where that AI assisted work is coming from. And I think we know people are using it, so please empower your team. Don't let them work in the shadows. If a piece of work is produced, ask them, did you use AI? And they should feel bold enough to say, yes, I did. And if someone says no, ask them, why not? That would have given you a good head start. So it shouldn't be something that we frown upon, but more about let's work together, challenge the results, and like Neil just already mentioned, maybe we can deviate our focus and attention on more complex or challenging areas and let it do the low level or menial tasks or easy wins as such. But of course, be prepared to be able to stand by the output and corroborate what's been done. I think what's also quite stark is, coming back to your example, Neil, is that not everyone has Neil in the pocket. As much as we would like
I don't think they would want Neil in their pocket, to be honest.
So I think, and you spoke about amplification of your way of questioning, and it will do the same on any bias that you have, will amplify it. So it's ever more important to address that risk by having an expert involved, by having a Neil in a pocket. And I think for me, what was quite scary and still see it is how plausible and how sleek and professional the outputs look. So what's your perspective on that, Neil?
I think from the perspective of the audience and the directors, and it might sound boring, let's go back to company law principles, where the statutory duties of the director are to promote the success of the company for the benefit of the members of the company. And directors need to act with reasonable skill, care, and diligence. Those are legal requirements. Those are not going to go away. AI is not going to take those away from us. So we've got to think of the principal risks and uncertainties that face the business. AI might be one of those principal risks. And the use of AI might also be a principal risk, but we've got to think about, should we be using AI to cut costs and therefore improve our returns to shareholders and investors? Is that an expectation? But it's, again, the human expertise in the matter. And in the very worst scenario, directors can be, and auditors themselves, can be in front of regulators, in front of the court, and is a reasonable defence for anything. I use ChatGPT, and this is why we did what we did in the financial statements. So we thought it was okay. Unfortunately, I don't think a judge is going to accept that as a reasonable defence. It might be a factor to take into account, but they'll say, "Oh, why don't you exercise your skill and care? Aren't you not you? Aren't you inquisitive?" So we do need to be careful and protect the business in a slightly different way. So it's making sure that humans remain fundamentally in the loop, and the humans will always remain responsible for the decisions. If we're in a courtroom, ChatGPT will not be sat beside us answering the questions on our behalf for the judge. It will be us that are ultimately accountable. So don't forget, it's having the expert oversight and the controls, because the use of AI may provide lots of benefits, but also could it increase the risk of misstatement, weak disclosures, over reliance on things, a tendency for controls to be weakened as a result of reliance on AI. Are those AI results plausible? Are they going to help us give that true fair view that the accounts should be presenting? And do we really understand the output? Can we corroborate it, and can we defend our work? Have we got the audit trails of all of the things that we've asked ChatGPT? If we've used ChatGPT to help us develop things, accounting, we need to keep a record of how it was used, when it was used, what the output was. Who's to say that if I ask the same questions today of ChatGPT, would I get the same answers, or would I get a slightly different answer? This is so important, and it requires a combination of your expertise and diligence as directors of the company, and also, effective use of employees, and also external advisors, whether auditors, IT advisors, true data experts like Bronwen, and of course, like MHA, that we're here to help and support you where we can. But fundamentally, the decisions of our board level directors' decisions are of fundamental strategic importance to the future of the businesses that you direct.
Absolutely, and I think that brings us quite nicely to some of the key messages that we wanted to get across. Absolutely, start experimenting with AI in a controlled way. Think about that laboratory that Neil was talking about. You've seen now, and we've illuminated some of the risk areas. And the one that I just want to highlight again there is, imagine if Neil did rely on that disclosure. Someone put it out, he said, here's the answer, didn't check it because he's got so much to do. It's his reputation that could be at risk of damage. So keep that in mind, that you are still standing behind that output, and it could cause reputational damage on the over-reliance. So ensure that you do have controls in place to challenge it and review the output, and that is strong. And of course, knowing when you need to have that expert oversight. Thank you, Neil. That's been massively insightful and useful. Of course, I sit in my tech world, and I always think it's a great tool, but really seeing it in practice and how it can be used has certainly been helpful for me.
No, thank you, Bronwen. It's been great for me because it's given me a chance to do some open thinking about more esoteric aspects in terms of the way that the accountancy profession is going, and how it sort of needs to develop and evolve in the future, and how we need to evolve. And give me a lot of food for thought, and I'm not sort of frightened about the future. The future is the future. There's nothing we can do to change it. So no, I really appreciate having the time to co-present with you this morning. So thank you.
Thank you. And thank you to the audience as well. It was illuminating to see how you're implementing AI and making use of it so far.
Thank you, Neil. Thank you, Bronwen. Some real insights there, and an opportunity to sort of take a step back and think about such things. We got a great question, which was, can you use AI to create an AI policy? My thinking there would be, you could probably get a pretty decent draft, but you might still want to tailor it to your business to make the most of it. So thank you for that. There was also a comment around ChatGPT may not be a secure platform for business purposes. which I think is pretty key to iterate around. You need to be very careful regarding putting any proprietary data into such systems as well. And there's a big difference between the open versions that are readily available, and those systems will be using all data that is put into those, versus a closed version that is separately acquired for the business. But Bronwen and Neil, if you had anything else to add on that, please do jump in before we move to the other questions in today's session.
Yeah, just on the using AI to create your AI policy, absolutely do that. But again, first draft, have oversight on it. Don't just rely on the first output, but that can certainly be the starting point. Just how I personally use AI, I often get, just getting started and having sort of writer's block, put it in and go, you know what, now I know what I want to say. It's not saying what I wanted to say, but now I know what I want to say and have my voice in it. Going back to that human in the loop. So absolutely use it and have it as your starting point.
And of course, for a policy as well that could so fundamentally impact the day-to-day running of the business, involve your legal team, your in-house counsel, your external legal advisors. They will want to sort of review that policy, and they might have a slightly different angle of looking at this policy from the risk perspective and the duties of directors and general. And it's an emerging area, it's an evolving area. There may be areas of best practice to consider. So it's not necessarily just use AI to press a button, there you go, thank you. Get humans involved in it,